Coming up today, stocks continue to pull back. Alphabet rips after its quantum computing breakthrough. What does this mean for cryptocurrency? Microsoft backs away from Bitcoin. Elon Musk says Bill Gates could go bankrupt. And a preview of tomorrow's inflation report. Let's go, guys. And welcome back, everybody. Looks like we're continuing to pull back once again today in the indices and mostly in the equal weight indices as well, as we've got a little bit of bearish breadth happening in the market this week with a bit of a decent down move there for NVDA today, off 2.69%. On the back of news, China started probing them on an antitrust issues. With curious timing, just after last week, the US admin banned exports of advanced AI chips to China. And this kind of spilled over into the entire semiconductor industry today. Taiwan Semi off pretty hard as well, along with one of the other big ones, Broadcom, coming off almost 4%. We get their earnings Thursday after close, and some of the hottest names in the market taking a bit of a breather today. Soundtown AI stalling out here off 5.5%, along with Big Bear AI down 15%, and the hot Reddit off 6.7%, along with Robinhood having a bit of a pullback. So some of the hottest names of late experiencing a bit of profit taking here, along with Palantir again today, just off a bit more than 2%, and the nuclear trade stalling out as well. There's Oklo. However, what is continuing to hold up well? Quantum computing. Even though all these other hot themes are pulling back, this one's really been gaining momentum over the last couple of weeks. Just looking at the Defiance Quantum ETF here, had another good day today. And that was on the back of some pretty significant news we got yesterday from Alphabet and their new Willow quantum computing chip, which just took a massive leap forward in its ability to solve complex puzzles. And the market definitely took note of this. Up over 5.5% today, adding 136 billion in market value. Pretty significant move. And I'd say Alphabet is by far the best valued mega cap tech out there. This trades on a forward PE of 21, which is almost an earnings yield of 5%. Pretty good considering their dominant businesses. The very valuable Waymo, robo-taxis, and now getting into quantum computing, in which even Elon Musk was surprised by how far they've come in such little time. It's kind of like what's happened with AI. Blew away many in the industry when ChatGPT was launched about 2 years ago. Same thing could be happening with quantum computing. And so apparently Google's Willow has 104 qubits, the way they're measuring the strength of quantum computing. China's claiming to have a 504 qubit quantum computer, even more powerful than IBM's most powerful supercomputer. And so while not immediately a risk right now, it definitely poses a risk to cryptocurrency, because once someone's got a fast enough quantum computer, they could essentially hack into any Bitcoin wallet. Because a quantum computer, once it's powerful enough, in theory, can run all trillions of different private key combinations at once to crack into a wallet. Could also actually hack the blockchain and how quickly the algorithms are solved, essentially mining all remaining Bitcoin, even creating new blocks. The list goes on. And that's the thing with Bitcoin and cryptocurrency, is it's always going to be vulnerable to being hacked. Every single day, someone around the world loses their Bitcoin and crypto because they've been hacked, and that just can't happen with the real hedge, gold. You got gold properly stored, nobody on the other side of the world can hack into your house and steal it. And even though some are saying you need millions of qubits to be able to crack Bitcoin security, there's some research out there suggesting as few as 2,500 logical qubits might be enough to challenge Bitcoin security. And can you just imagine that? Waking up to news one day, somebody's hacked BlackRock's Bitcoin wallet. Somebody's hacked Satoshi. What a panic that would cause. Whole thing could come crumbling down in a couple of days. And just like we've seen with AI, that pretty much ripped up Moore's law, and our computing power doubles every couple of years or so as AI is growing leaps and bounds. Same thing could happen with quantum computing. So like I said, while it may not be a threat right now to Bitcoin, maybe in 2-3 years it could, especially if America fully embraced Bitcoin as a way to deflate their debt away to China's detriment, and they end up having the most powerful quantum computing in the world. What do you think might happen? Might be a little rug pull. And maybe this is why Microsoft backed away from investing in Bitcoin, as a lot of people have been trying to persuade them to do. But big shareholders voted down the measure along with the board. But just looking at Microsoft's stock price, the market didn't seem to care at all. Pretty much just traded flat there today. And like I said, Alphabet had a good pop. Quantum computing stocks still running hot. But all this news is probably what's caused a bit of weakness in Bitcoin over the past 24 hours. As some investors may be questioning, are those digital coins I've got always going to be safe? And can I really trust the Wall Street banks to look after my wealth for me, given the whole thing was initially set up to be decentralized to begin with? Now Wall Street's the largest holder. But you can bet your bottom dollar in Wall Street's terms and conditions, the fine print you agree to when you invest in their products. If something like this happens, they'll probably classify it as terrorism, money laundering or something, and it'll be retail investors left holding the bag, as Wall Street will clip their ticket and collect their fees no matter what happens to Bitcoin. And if something like that were to happen in the next couple of years, say investors would come rushing back to gold, realizing once you've got gold buried in your backyard, it's unhackable, and why it's the ultimate hedge. And gold actually caught a bid today, trading back above its 50-day, pushing up against monthly highs here. And just speaking of Microsoft, we got Elon Musk saying if Tesla stock surges 200% to become the most valued company in the world, it could bankrupt Bill Gates. Bit of a wild claim. And so apparently Gates is still short Tesla, which kind of contradicts a lot of what Bill Gates apparently stands for. Big global advocate for climate change. And here he is trying to short the world's #1 clean energy brand, Tesla. In other words, he wants Tesla to fail. He wants the stock price to go down. He doesn't want them to succeed. And it's not just his short position in Tesla that makes him a massive hypocrite. He also considers himself a global advocate for health as well. And just looking at his portfolio here, for which of course he has influence over. If he didn't want his portfolio manager to invest in certain types of stocks, he could simply just send him an email saying, hey, don't invest in these types of stocks. It's not stuff I believe in. It's not stuff I want to support and profit off. But anyway, he owns shares in Coca-Cola FEMSA, which operates South America, Central America. For those of you who don't know, a lot of these countries, Coca-Cola basically pays off the local governments so they can add way more sugar to their products and market them directly in local communities and schools, getting the kids hooked early. So Bill Gates profits from that. Not to mention he's also a shareholder in Anheuser-Busch, beer maker, Kraft Heinz, which make highly processed sugary snacks, along with Hormel Foods as well. Very similar stock and selling highly processed foods. So what Gates says and what he actually invests in and profits from are two different things. And like I said, he wants Tesla to fail. And Elon Musk is having a fun time trolling him on X here today, because once again, Tesla is continuing its run. Now just getting within a couple of points of all-time highs today. Once we break out above this resistance box, it's in blue sky territory. And so I hope Bill Gates is still short the stock. I'd love to see the headline. He has to cover his shorts for massive losses because he deserves every bit of it for being such a huge hypocrite. But anyway, just getting back to the market. Some are not so convinced this bull market's going to continue on next year, especially as we're coming in pretty hot. Just done 2 consecutive years above 20% returns. And so once again, the bears are coming out as we head into a new year. BCA research, they think a recession is more likely than not next year. And even in the absence of a recession, they still think risk assets could disappoint. They're expecting a bear market to start in the first half of next year, and they're calling for investors to take profits on any hot stocks they hold. And I mean, it's true, we are pretty hot here in the short term. Just looking at a bunch of sentiment indicators, most of them are at the top percentiles. Looking at equity market flows, options data, sentiment surveys and the like. So for sure, we are a little stretched here in the short term. Wouldn't be surprised to see the market actually consolidate a little bit, but it's too hard to call the top. There's just so much momentum, the economy and corporate profits, such a huge structural tailwind, and the market hasn't gone completely vertical, which you typically see in market peaks, blow off tops. But we are definitely having a bit of a pullback here, looking underneath the hood of the market, the Russell 2000, which is a much more representative index of the stock market than the S&P and NASDAQ, for those heavily weighted by mega cap tech. So the Russell 2000 is making its way back to the 50-day VWAP. But then after that, we still have some pretty good bullish seasonality for small caps versus large caps over the next 2 months. But for the here and now, apart from a handful of stocks, most sectors are definitely pulling back in the short term as the market catches its breath. And it'll be interesting to see what inflation print we get tomorrow, and more importantly, how the market reacts. Market hasn't been so sensitive to economic data of late, and that's because most of the prints we're getting are pretty much all coming in line with what's expected. Inflation has been bumping around the high 2s, low 3s on core inflation. The market's kind of fine with that. The Fed still wants to cut, and there's what the street is forecasting for tomorrow. They're expecting core inflation to have grown 0.27% month over month and 3.3% year over year. But just looking at treasury yields, did tick up slightly today ahead of inflation report tomorrow morning, but not by much. We can see that in the 10-year, 4.23. But by far and large, interest rate traders are still convinced the Fed is going to cut when they meet in a couple of weeks. 85% probability. So we'd have to get a real surprise on inflation for that to change a lot. But just looking at the volatility market, VIX one day, super low 10. So option dealers are not forecasting any surprises tomorrow. So inflation should indeed come in as forecast, and this market may just keep grinding on low volatility days. Realized volatility currently tracking super low, 7.76% annualized. But it is still a stock picker's market. We can see that in the implied correlation index, 9.94. That's kind of a measure of how much stocks are all moving together. And typically, when we get sharp dives in the market, correlations move to 1 as there's mass liquidation events. The sell button gets hit on everything. We saw that last time on the 5th of August. And any other time we get a panic in the market, correlations will spike. However, when things are going well, you can have some stocks going up, some stocks going sideways, some going down. And that's what causes this index to fall low. But if it does get too low and stays there for a while, it can be a little bit of a contrarian signal, as we're pretty much guaranteed some sort of volatility event at some point. Pretty much every year, we get at least one VIX spike above 2025, even though it may be short-lived. There's bound to be something come along. And just moving on today, the new US administration, not even in power yet. However, it looks like we're already seeing some positive effects from their mandate. The FDA may finally ban artificial red dye from beverages, candy, and other foods. Honestly, I think people in 100 years' time will look back at this point of history and what was allowed to be added to our food products and how much disease that actually causes, and just think how crazy it is. Red number 3, a synthetic coloring made from petroleum may be banned from the market in the coming weeks. And I mean, this is the thing with a lot of these chemicals and additives. They say in small amounts it's okay, doesn't cause problems. But I mean, how do they isolate that and test that in people? Because there's hundreds of other things we put in our body. And at the end of the day, the instance of disease, all types of disease, significantly higher now in humans than what it was 20, 50, 100 years ago. During that point of time, all this crap's been added to our food. And so over half of all humans will end up with some serious disease, heart disease, cancer, so on and so forth. However, if you go out into the wild, native animals have nowhere near the instance of cancer and other diseases that humans do. We just kind of accept it's normal now that almost a quarter of all kids in America have some sort of disease, obesity, declining life expectancy, and then to think it has nothing to do with food is kind of mind-blowing. I mean, just common sense would tell you it's probably not good to ingest something made from petroleum. We shouldn't have to debate scientific studies about that. It should just be obvious on principles. But anyway, this is what's coming after all these companies that make this crap, type of companies that Bill Gates invests in. Market clearly saw this coming into the election. A lot of them being sold off hard, and we're already seeing some consolidation. Before the new admins got in power, Hershey Company may be looking to get gobbled up by Mondelez. This is typically what you see happen with industries under pressure or going through transformations. There's some consolidation because they get whacked down, they get in trouble, the future's uncertain, they lose investor confidence, their whole line of products comes under question, and so no doubt we could see some tie-ups in this space going forward. And on the other hand, companies that are trying to make half-decent products, something close to what nature resembles, have been doing pretty well. United Natural Foods, trading up again today on a pretty good earnings report, smashing expectations. And so they focus on making organic food, natural food, kind of different from what the mainstream crap is. And same with other stocks like Natural Grocers, ticker symbol NGVC. Similar story, focusing more on natural, organic, getting away from the chemicals and additives. It's been trading pretty well of late. And up until a couple of months ago, before the market started getting wind of RFK coming in, the GLP-1 weight loss drug companies, Eli Lilly, been some of the best performers this year. While others like Kraft Heinz have come off a bit. And also interesting to see America's largest gym operator, Planet Fitness, also having a good year as well. So I think this is a theme that could run through the market potentially for a few years, as more and more people are waking up that maybe the things they put in their body every day does impact their health. And maybe we can't rely on the good-hearted corporate folks from those ultra-processed packaged food companies to do the right thing by our health. And maybe it shouldn't be normal that half of us get disease, only for the healthcare industry to profit off us further. And so unlike Bill Gates, I for one won't be investing in those highly processed packaged food companies. And just moving on to commodity, oil having a little tick up on ever-present Middle East risks and China demand prospects after we just saw the fall of the Assad regime in Syria. They're not a major oil producer, but it did stir some jitters about the implications for Assad's allies in Iran and Russia, which are major oil producers. One analyst saying after the fall of the Assad regime, Iran may become even weaker than before and less able to threaten Israel and economic interests in the region. I think Iran's going to get shut down real quick with the new admin, who's probably going to have little tolerance for anything coming from them and is set to further back Israel in their determination to win the war, which Iran started with them via their proxy group. And once again, crude's coiling up. We could be on the cusp of a bit of a move with crude, which may just go against this bullish seasonality and take out these lows. If things do cool down in the Middle East, the supply side's definitely there for it. New admin really wants lower oil prices, and that should be a tailwind for the economy and the stock market as well. The biggest cost input and variable into the economy, but we've still got agricultural commodities breaking out on the upside after coffee just hit its highest price ever today, along with a strong rip in cocoa. Price of your chocolate's about to go up. However, we still don't know about China just yet after yesterday's big rip, which was a little bit surprising how positively the market reacted just to that news of Chinese officials saying they plan to support the market. There was nothing really big announced. And like I've been saying, I think Chinese securities are going to remain volatile for a few months until we really know what sort of tariffs they're going to be dealing with. And so once again, as we've seen today, Chinese securities proved to be very volatile. After Tiger was up 26% yesterday, down 14% today. And that's why I always say, don't chase hot prices. In my opinion, it's always better to buy the dip and buy into short-term weakness. And then if you need to trim, you can sell into short-term strength. But anyway, if Tiger does pull back and we take out this support level down into the fours, I'll be adding more shares to my long-term investment there. Yeah, and that's pretty much a wrap for today, guys. Not a whole lot of big headlines out there. A lot of people talking about quantum computing and the threat to crypto. And like I said, a bunch of these hot small caps pulling back underneath the hood, while the market itself is just having a little bit of a pullback, but we've still got a bunch of mega cap tech trading firmly. Apple, Amazon, Alphabet, and Tesla really holding up the indices here. And I guess we'll just have to wait and see what we get for inflation tomorrow. But like I just showed you in the volatility market, they're not expecting any surprises at all. So we'll see what print they feed us tomorrow and how the market reacts. Thanks very much for sticking with Click Capital, and I'll see you guys again tomorrow. Cheers.